Okay, as standard with all these questions, we're going to start off the question by having the blank document laid out here ready for us to put information into. Now we're going to do our adjustments first, and as we do the adjustments we'll put those numbers in. So I'm going to start off with, down the bottom I've got my closing stock figure. So this is question 2 from the textbook. Okay, now just zoom out a bit. Okay, so closing stock is 76 grand, includes damaged stocks. I need to go and do some rough work for this, and generally, as I've said to you before, the best thing to do with this is just to put the rough work in a separate answer book in the exam, and then you hand that out. It just means that you have the blank question in front of you, ready to put information into, and in a different answer book you're doing the rough work, doing your calculations and putting it into the blank question when you're finished. So start off with number 1. And I'm just going to make sure all of these are lined out right. Okay. So the first one is closing stock. So it says it was 76. So that means when we physically went around the building and counted all of the goods that we had on our shelves, we worked out that they were worth 76 grand. But that includes some stock that was damaged. It originally cost 5.5. So that means including the 76 is 5.5 for those stock, but they're actually not really worth that. They have a net realisable value. So if we realise it, if we sold it, we'd only get 2.8. So we've actually made a loss of 2.7. So that means my closing stock so that's worth 76 minus 2.7. Okay, so 73,300. So I'm going to put that straight into where it should go in the question. So closing stock always goes in trading profit and loss. And remember, all of these adjustments we're going to do, they should always appear somewhere twice. And the second place the closing stock goes is in current assets. So I'll put the same number there in current assets. Okay, and that's it. That's as much as you need to do for that first one. So note number 2. So provide for depreciation. So quite a bit involved in this one. Okay, so we're going to have a look and change. I'm just looking at what names that they have. So motor vehicles is the name of the account up here. So I'm going to change motor vehicles. I'm going to change the provision for depreciation of motor vehicles. Then I'll work out my disposal to find out did I make a profit or loss when I dispose the item. And one of the things I'll need to do to be able to work out my disposal is my depreciation on the disposed item. Okay, and then after that I'll do my depreciation expense. Okay, so now there will be a couple of other things I'll do to go with it, but we'll try and do these kind of slowly, bit by bit, as I go through it. So just zooming in a bit and just make it a bit easier to see. So my motor vehicles says here cost 130 and they're now worth 7,500. So that means 130 goes there. Okay, and the fact that they're worth 7,500 means that they're worth 130 minus 7,500. That's the provision for depreciation. So during all the years that I've owned it, I've taken away 59,500 in depreciation. Now the motor vehicles, I'm going to add to that the value of the vehicle I bought, and I'll take away the vehicle that was depreciated, or the vehicle that was sold. So I bought a vehicle costing 46 and I got rid of one costing 52. So I'll have 130, and then I'll have to that I'll have plus 50, I'll get rid of the one first, so minus 46, and then plus 52, and that will give me a final figure. So that's 136, and that's the figure. I'm just going to put a circle around that just to remind myself. That's the figure that I'm going to eventually put into my balance sheet. Okay, provision for depreciation. So I'm going to adjust that with all the depreciation on the thing I got rid of, plus my depreciation expense for this year. So I'll start off with the depreciation on the thing I got rid of, and then I'll be able to work out my disposal. So the depreciation, 46 grand is what the thing originally cost. We multiply that by, top of the question, 15%. which is the depreciation for 1 year. And then we're going to multiply that by the number of years we've had it from the very beginning to the very end. So we bought it on the 1st to the 6th, 2000. So that means we had it for all of the 6th month all the way through to the 12th. So that means 7 months of 2000, all of 2001, all of 2002, and we got rid of it on the 1st to the 4th, 2003. So that means it'll be 3 months of 2003. So that means it's 2 years and 10 months is the full life that I've had it. So they'll give us all of the depreciation during that time. Okay, so 2 years is 24 months, 10 is 34 months, so 34 twelfths. So it'll be 46 grand times 0.15, so that's 15%, times 34 twelfths. Okay, and that'll give us the figure. So that's all the depreciation during the time I've owned it. And I'll be taking that away from my provision for motor vehicles. So minus 19550. Okay. And then I'm going to add on to that the depreciation expense for this particular year. But before I do that, I'm going to work out my disposal. So the thing that I got rid of originally cost me 46. It had 19,550 depreciation written off on it during all of its life. So that is 450, so it'll be 26, so it's worth 26,450. That's what it's worth on the day I got rid of it. How much did I get for it? I got an allowance of 18 grand. So I got less for it than it was actually worth. So that gives us a loss of 18 from that is 8450. So just double check, 26 take away 18 is 8450. And again, that's another number. Okay. That's another number then I'm going to put into my trade and profit loss. This is going to be an expense when I'm finished. Okay, back to I have to do my depreciation expense. Now, the way I did it in class is I start off with the thing I sold, then I have the new one, and then I have the continuing one. So the continuing, I'll do that first. They're the ones I had at the beginning that I still have at the end. So I had 130 at the beginning, okay. I got rid of the 130, I got rid of something that was originally worth 46, okay. So that's going to give me a figure of 84, okay. Yep, I think the maths is right. So it'll be 84 times 15%. So that's a full year's depreciation for that one, okay. Now, the new one. So the new one costs 52 times 15% for a year times, now I got it on the 1st to the 4th, so that means I would have had it for 9 months of the year. So 52 times 0.15 times 9 over 12. And the one I sold originally cost 46. So multiply that by 15%. Multiply that by, now I had it up to the beginning of the 4th month, so that means I would have had it for 3 twelfths, 3 months of the year. So 46 times 0.15 times 3 over 12. So I'll add all these together. So that's my total depreciation. Now that number is going to go into my trade and profit and loss, and I'll put that in now in a second for you. And I've got my loss, that, okay, so what I have to do now is my provision for depreciation. So I've taken away from the original 59,500 I had at the beginning. I've taken away the depreciation on the thing I sold, and then I'm going to add on the depreciation expenses this year, which is 2175. Okay, so that's the figure that I've calculated there. Now there's one final number which we have to deal with. It says the check for the net amount of the transaction was in the bank account was incorrectly treated as a purchase of trading stock. So instead of putting the check for buying it, putting it into the vehicles account, I put it into the purchase account. So I need to take it out of purchases. So my purchases account figure. Now I'm just quickly checking. I didn't do anything with purchases in my first note, so I'll go to the trial balance to find what the purchase figure is. 564 is the figure I have there. So 564. So I'll put in 564, and I need to take away from that the amount of the check. Now, the new vehicle cost 52, an allowance of 38 was given, so that means that I wrote a check for 18, subtract from 52, I wrote a check for 34. Okay, so that's the figure for purchases. So again, that's another one that I'm going to put into the accounts. So I have a purchases figure here. So I put that in. Next, I'm going to do, I made a loss on disposal, so that'll be a distribution expense. And I also have the depreciation of motor vehicles. So there's two expenses. So the loss on disposal is 8450. Let's learn how to spell. No, definitely need to learn how to spell. So loss, or the depreciation expense is that one. Now I've put in my purchases, that. Now I need to do my tangible fixed assets. So I'm going to have motor vehicles. So the original cost figure is the first number up here. So that's what the asset account is. The provision for depreciation is the figure goes here. So we have that. And eventually we'll subtract those two. So just double check I put them all in. So I've got my purchases figure. I've got my total depreciation for the year. I've got my disposal loss, provision for depreciation on that. And I've put in, obviously I put my closing stock as well. I might as well circle that one. And that one, remember, goes somewhere twice. Okay, so it's a current asset and it's cost of goods sold.